Okay, this is an important lesson for anyone that wants to become a professional investor and loves investing. I've been doing this unprofessionally for decades, but professionally not too long. I just launched the fund formally a month ago. And so I wanted to go through a review of basically my whole experience with running this fund and thinking about what's the right strategy for me as an investor. And I think that's the thing I discovered more than anything is that the investor is 100% a personal preference, your investment style. And so I'm trying to learn what my style is. And I've learned that by going through and reviewing some of the greats. But what I first want to cover is a few interesting things that shifted my mindset. So this is February 23rd to April 12th. It's currently June 4th for context, June 4th, 2026. So February 23, I start tracking this and the market goes up. I'm the blue. I go up, I've beaten the market a little bit. Market goes down, I went up, great. Market goes up, I stay up. Market goes down, I go further up. Market stays sideways, I go down. Market goes down, I go up. Market goes up, I stay put, more or less. And then if you look right here, you'll see what happened. I decided that I was going to sell everything and move to cash. And this was February, the ninth day after February 23rd. So what is that? That would be what, March 3rd or whatever it is, early March, I think. Okay, so that happened on the 8th, 9th, and then you can see the divergence from there. And so for 30 straight days, I didn't buy anything. I didn't own anything. I just read about stocks, and you can see my portfolio doesn't really move that whole time. Whereas the market was going down, straight down for 20 days and then rallied on the final 10. And I just watched that completely passive. Didn't buy anything, didn't do anything, just read stuff, learned stuff. And so basically the reason I had to do that is because I was going to launch this fund and I wanted to be in cash and I didn't want to have money in the markets. And so I got lucky on the timing, but I actually got more lucky on the lesson because it was probably the first 30-day period in a decade where I hadn't like looked at stocks from a trader's perspective. And so, what did that teach me? Well, okay, let's think. I would turn on CNBC after 2 weeks of not checking my portfolio, and I would see just like the craziest shit that they're talking about. I'd open X, Twitter. All of a sudden, I'm like laughing out loud at how absurd this shit is that people are getting wound up about. And so the lesson it taught me was you separate yourself from the noise, which I did here accidentally, then it's way easier to discern what is the signal and what is the noise when you're looking at it from an outsider's perspective. And so I'm going to go through my, 1 second. All right, so I'm going to go through the first month. We're currently on the second month, and things have gotten better the second month, but I'll walk through the first month. Okay, so I'll just read it. I want to explain first this mental shift that I'm going through. This is what I wrote to my investors. I want to explain the mental shift I'm going through before we review this first month. The shift is from trader to investor. Before this fund, I would do the craziest, most irresponsible things all the time with my money. I would put 100% in crypto. I'd go long on some ridiculous stock, blah, blah, blah. It was just like, it was comical, frankly. And so, that was good for some time, but it also obviously causes you a lot of volatility and a lot of pain. So for example, I'd make 100% of my money. then I'd lose 75% of that, then I'd walk away with 25, then I'd be pissed I made 25, but that's a good thing. And it was just like very unstable. And so I tried when I was starting this fund, I said, no, I'm not going to do that anymore. I'm done with that shit. I'm gonna invest. I'm Warren Buffett, right? Okay. So then within 3 weeks of starting the fund, I had made some stupid trades. Lost 6 grand on Dave. Still love the business. Lost 2,500 on Qualcomm. Not sure I love the business. Lost 1,000 on this IPO. That was a red hot IPO. Just stupid stuff. And so the fund went down 0.55%. And I don't know if it. I think it went down, maybe went down 1% at its lows. I'm not sure. I got to look at it. But there was some good stuff during the first month too. We deployed 380 of the 1.4 we raised. NVIDIA, obviously, Microsoft, Adobe, Exxon, Microsoft, Adobe, Apple, NVIDIA. I just read those two ways because they're that good to mention twice. Great companies, tough to go wrong with them. Not really sure if that should be the strategy I go with, or if those are short. I don't know. What am I saying? They're the best companies. You can't go wrong. Anyways, okay. So really, there's these two investors, and I think every investor in the world has this concept in their head. Um, there's the Jekyll and the Hyde. There's the one who's smart, thoughtful, goes slow, doesn't react to FOMO, works hard on research, and then there's the other investor, which, by the way, these live in two parts of your head. The investor is impulsive, reads X immediately, puts 50 grand into some stupid stock, is like trading with a mobile device on the train, dumb stuff. And so I actually wrote an AI program that looks at every trade I did last month and then goes through it and tells me, hey, idiot, here's what you're doing. That's what it's called, hey, idiot. And so it identified that there's a key difference between those two people, investor one and investor two. One is willing to follow our policy rules and one is not. And if you look at the trades in volume, 50% of the time investor one appears, and then 50% of the time investor two comes in and sabotages the trade that investor one did. So it's a mess. Good buys. We'll skip through that. Blah blah blah. Here is the heart of it. Investor one is patient, waits for his pitch, and has fallen in love with the idea of hunting for bargains in high quality companies. Investor one operates from a place of it's insanely unlikely that I will lose money on this over the long term. Even in a worst case scenario, I won't lose much. That's a mindset. And what that means is you're not momentum trading, you're not YOLOing, you're not trading off of news or what Trump tweets or momentum or any of that stuff. You're looking at businesses, you're analyzing businesses, you're slowly investing, and you're owning them for the long haul. And you buy when the market is in favor for you. As Warren Buffett says, market is in service of you, not you being in service of the market. And so it's key that you sit your ass down and wait for the fucking fat pitch. Easier said than done. So let's think of a metaphor. How come everyone knows to eat healthy and work out, and yet not everybody does it? Why? Discipline. And that's exactly the challenge that I faced in this first month. I know I should be sticking to the rules, and I know I should not be probably YOLOing into certain things, and yet it just happens. And so I don't do that with my fitness, and I don't do that with my eating, so I should not be doing that with my money. And so I tried to build some rules that I could stick with. And so these are the 3 rules. Never buy initial price above fair price, initial purchase above fair price. Fair price is the variable here that's defined differently per company, and that's why it's not a hard rule, which is, I guess it makes it a bad rule. I don't know. Anyways, only 1 unit at that fair price. So that's at least a better rule. Even if I'm wrong on the price, it at least limits me on what I can lose. This forces me to wait until either a decline or until earnings have increased and the PE ratio has gone down. So it's actually a better deal. And then if I don't fully underwrite something and have my price target set, I don't buy. Now, that should be obvious, but it is not. And so what I did was I printed out those rules and I put them all over my house. And they're all over my house. Um, yeah, it's been working. We don't need to go into the details of that, but it's been working. And that's that. Okay, so thanks for checking in on month one. We're already almost done with month two, and we did much better this month. So I'll walk you through that next video. But subscribe, like, tweet, retweet, comment, don't comment, tell your friends, send your mom, do all the stuff that helps me become YouTube